Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, April 28th, 2021. I've been looking at the charts all day. There's a few things to mention, but nothing that really stands out. Remember, we're in the thick of earnings week, peak earnings week right now, especially with the big market-moving tech companies. So we've got a few of those out of the way, and a couple more to go. So let's just take a look at the charts. Again, not much to mention in the broad markets, at least today. There's some other things moving, but we're flat. This is the S&P 500 via SPY, and as I'm doing this video, we're flat, 0.02%. So nothing new to report there. 410.39 still remains the level to flip us from a buy signal, after that divergent low, and the current trend is still bullish, and that will trigger a sell signal if and when 410.39 is taken out. And if it's not anytime soon, and we continue to move up, we'll have look at some other levels to watch. But again, not much to say in the market lately. These companies are reporting. We've just been moving sideways now for the past week or so there. QQQ, similar story. All the lines are there, but when you take all the lines off and just look at prices, these are 60-minute charts, by the way, if I didn't mention it. You can see back here, this is earlier in the month, so pretty much all month, just kind of grinding around sideways there. The divergences continue to build, or they're still in place. But we haven't taken out what we need to take out, and that's about 334 on QQQ, as well as that level I just showed you on SPY. So that's that. I've showed them to you on NQ and ES as well. There's the level right there. The recent lows about 13,690 needs to go to get a sell signal on NQ, and then ES we need to take out that 4100 level. And that's that. So right now we're just grinding around sideways. Let's not talk anymore about the markets, because there's really nothing significant to note, or at least no new developments at this point in time. Okay, what do I want to cover? Let's talk about what is moving and where the opportunities are to make money lately, and that has been, I'll tell you, those energy ETFs are still doing well. Those were highlighted. The three that I follow, XES, XLE, and XOP, all mentioned as objective longs that support the other day. On XES, that's about 47.75, up another almost 6% today, 5.69% right now. Good for about over 10% so far. And we're coming up on that 50-day moving average. You can see that yellow line there. It capped the other advances recently. It's decent but not great resistance. I always look at, just because a moving average is a popular one that traders will use, I like to look at each individual security and say, how does it act? In this case, we had some resistance there with the 50. We got a breakout candle and then ran, but here and here we were slicing and trading through it. So on a scale 1 to 10, I certainly wouldn't give it a 10. Just a level to note. And again, if you were just trying to game a quick bounce, which, by the way, we did also that, and I think I mentioned at the time, that red line there is a 200-day exponential moving average, and that's also a key moving average that will act as support when you're above it, and you test it from below, or above, or resistance when you're down below it and you run into it. So again, that was the case for an objective long entry, a pullback to dual support levels, price, and a key moving average. And if you're going to swing it, there's the potential target right there, 55.44, and a 10% move in just less than a week or so. If you want to take profits or at least tighten stops up to let it run, not a bad idea in my opinion. All right, XLE, same thing, 47.06. The XLE is up about 3.5% today, so that's about a 6.5% gain on XLE. Remember, this is big oil. You want more juice, so to speak. I like to trade XOP and XES, because if you get the call on the energy stocks correct, they tend to move up more than the big, multi, big large cap, mega cap stocks, because you have smaller companies with higher growth rates, and they tend to trade, more volatile than the big oil. So I covered XES, I think, to begin with, and there's the last one, XOP, or you can use the ETF GUSH, GUSH, which is 2-time leverage. Good for about over 14% so far off the tag of support right there, as mentioned the other day, just last Wednesday. All right, so that's that, and looking good. Took out that 80.35 level. Where it goes from here, my convictions aren't high. I was looking at that for primarily a bounce trade, but again, for longer term investors looking for pullbacks to support, I'll highlight these levels, and who knows, maybe this is the run the next highs. But at the very least, if you grabbed it last week, at minimum, I'd raise stops to entry right now to assure a break even, so you don't lose anything on the trade. And more so, I'd raise stops to protect profits at this point and trail them up. And again, it depends on your trading style. Long-term investor could stand to have another back test to that level, whereas an active trader wouldn't want to give back, that much profits. Get in, get out, move on to the next one, kind of thing. And then DM continues to move higher. That was highlighted in a video back here a few weeks ago with this 1254 level, and then even better support if it continued down to 1079, which it did, and so far continues to move up. Nothing but green sticks other than this 1 day right here so far, and still have that first target there about 1566. And then that GSHHY still flirting with this uptrend line right here, yet to break out. Took out the downtrend line, but as I said, that wasn't as important because you have a big resistance level of 1055. So that's still, if you buy it here, stop somewhat below the uptrend line, and then hold off. Probably best to hold off to take a full position unless we get a breakout above 1055. Because again, higher risk one, and it hasn't broken out yet, but some big upside potential targets if and when we get an impulsive break above 1055. What else? There's a couple new ones. BB is on my radar right now. Not crazy about it, but I'm throwing out trade ideas. I think if it can take this 958 level out with conviction, not just a little intra-period pop, but a solid breakout, maybe a solid 60-minute close above it, I think BB could run. I'll have to kind of sharpen my pencil on these targets here. Let's just say first stop would be somewhere right about there, 12.16, if that goes. You have this bullish divergence, positive divergence on the 60-minute time frame, and the daily chart, it came back and hit this, have minor support here, about $8 it hit recently. And you can see the resistance right overhead of, again, about 960 or so on this daily chart. So if it can pop that, it could run, and it could run all the way up to 1222. That'd be a, if it gets there, that'd be a nice run, about a 27 or so % gain. What else do we have here? We'll look at some of the futures contracts, and again, you can trade these via ETFs or ETNs, such as natural gas. I just did an update, been doing quite a few updates on this one recently. Been buying pullbacks to the uptrend line here. Last one was right there the other day, and so far good for about a 7, almost 8% run, getting really close to that $3-ish target there. So again, like anything else, you want to maybe tighten up stops, or get ready to book profits, or even take profits. Are close enough, up to you. Longer term, still bullish on natural gas, but it's volatile. If you're going to trend trade or have a long-term position in natural gas, expect some pretty powerful pullbacks. It's just nature of this beast. Very volatile price action. One of the most volatile commodities that I know of in trade. And as such, when swing trading, you like to look for, objective long entries, divergent lows, particularly at support, or downtrend line breakouts and things like that. And then as far as shorting it or getting out, obviously if you start to get some negative divergence, we really don't have it here on the 60-minute yet. So something to watch. I think there's probably more upside in that gas, but for now, like I said, got real close so far, and to that 3-ish target. And so not a bad place to book some profits if you were in it. Let me do an update on gold. Yeah, that's what I want to update as well. Okay, so gold I mentioned yesterday. Had a trend line here that we were flirting with. I said if it broke, we could get a pullback to there, that 1759.75, and that's what we did. So, if you're a quick trader, you could have shorted it or use a stop to get out and then get back in. Or if you're a bullish, gold, because it is, I'm bullish on it, longer term, intermediate term. And sometimes you can take out these little 60-minute trend lines, get a pullback to support. If we're in a bull trend, if this was a major bottom that, right here, which I believe it was, That's the call I made. Long-term support on the daily chart and a long-term, bottom of my buy zone that I've had for many, many months. If that's the case, then what you would expect is you see a trend line break like this. Bears get all fired up, think it's the start of the next leg down, so they short it. But then the pullbacks again, if we're in a good uptrend, early stages of an uptrend, buyers should step in at these early targets, early support levels, and so that's certainly a possibility there. And again, whether it happens or not, it's easy to say. It's subjective long entry there, or if you were already long, instead of using a stop there, you might consider a stop under that solid break of the 1759.75 level. And let's look at the currencies, because they certainly come into play here. There's a euro. Here's a trend line as I gave it to you yesterday, but I wanted to modify it, and I'll show you, why. And I always say this, the charts are dynamic, and so is my analysis, meaning the charts are constantly changing. So I had before excluded a little whip down there, a little whip, and a little one through there, and now that one. So at this point in time, I'm going to take this trend line and I'm going to tweak it, and I'm going to come in to today's lows, which then also captures that reaction low right here from the other day, right there, and comes closer to that one. So that's a little better fit right now. We still have some divergence that's been forming, and doesn't guarantee a trend reversal. If you have a solid break of that trend line, it probably will, and that's your pullback target, and that, all other things being equal, should be net bearish for gold and may cause another leg down in gold. However, we are in an uptrend, and unless we have a sell signal, that uptrend may continue. So this was another pullback now to trendline support. And as far as the fundamental case goes, I don't want to get too much off topic. I do like to talk about fundamentals. Charts are technicals, fundamentals are what's going on. And I like to keep politics off the board, off the comment section, but I get the headlines, and I'm sure that those of you that do, reading about all this, everything the White House is trying to do now as far as pushing through tax cuts for the wealthy, for businesses, bigger social programs, a massive infrastructure spending plan that really hardly has anything, very little to do with actual infrastructure, or at least roads and bridges. But again, that stuff has to be paid for, and it's bearish for the dollar. We're printing money, we're borrowing money, and so net, that's not good for the U.S. dollar. And so if the dollar continues in a downtrend, that should be, and it always, longer term will be, bullish for gold, because gold's dollar-based and dollar-sensitive asset. It moves inversely. So there's the U.S. dollar, and that, by the way, never broke the trend line that I gave you yesterday. We're still below there, and so if you wanted to, I always like to watch the euro, because the euro is almost like looking at the dollar upside down. The dollar and the euro tend to move inversely, because the euro is the biggest component of the dollar index. However, the dollar is more important of the two. If you're going to trade it, use the dollar to confirm your trades on gold, and so the dollar remains below that trend line right there, and that's a nice clean trend line too. We don't have any violations of that trend line so far. Just 1, 2, 3, 4, 5 clean tags of it so far. There is divergence forming, potential divergence. We need to confirm it. So again, if we break out, this would be maybe your upside targets for the dollar, and that would be most likely be near-term bearish for gold. But if we remain in a downtrend in the dollar, that's going to be bullish for gold. So hope that makes sense. What else do we want to talk? Oh yeah, there was a quick pullback or get out of your long trade idea in wheat, and a perfect tag of that target. This is ZW wheat futures. I'll show you the chart of the ETN in just a second. Quick stuff, but there was I pointed out this divergent high and then this trend line yesterday early, and we went on to break it right after that and gave us a sell signal. So from the top, that divergent high was good for about a 7.5% pullback in wheat, and if you got out of your wheat or shorted it, you were good for about a 4.6% drop right to that first support, just a hair below it there, but 17,232, that was that target I gave you yesterday, and so that was hit. And you can see how the technical analysis works. Pretty clean, a little mini uptrend line, divergent high, and boom, big sharp reversal, impulsive. But look, Wheat's in a bull trend, especially a longer term. When you zoom out to the charts, the case can be made it's an early stage bull market action, and so far aggressive buying off that level. So if you are going to short things that are in a powerful uptrend, you got to be nimble. You got to be quick. Get in, get out. Don't stay late to the party. Don't be the last one to grab a chair when the music stops, because sometimes there isn't one. Meaning, you got to cover, have your limit order, buy to cover set in advance. So when that target's hit, you get out. If again, that's what you were looking at, or if you were, concerned about protecting profits on the long, you should have stopped out here and sidestepped the rest of that give back. All right, where they go from here, longer term bullish case could be made certainly to step in there and buy, but I suspect just as well, I'd probably say coin toss odds we can get another leg down here with that divergent high and maybe hit this trend line, in which case that would be your next objective long entry right there if we hit that longer term uptrend line here on this 60-minute chart. And as far as wheat goes, I've not forgotten about the fact a lot of you out there probably don't trade futures, trade ETFs and ETNs. There's a little downtrend line that was taken out wheat, and wheat was highlighted back here on that pullback to 575 support as an objective long entry. That's been a level we've been trading off for years now. It's been price targets several times. You can see T3, T3, T3 right there, meaning that's levels we get reactions. They were predicted in advance to have a reaction there. Each time we got there, we had a reaction, meaning a pullback. You hit it, and then you broke it out. You hit that target, pulled back, then you broke out, and then you back tested. Oh, we broke it, but then we regained it, hit it again, and that's been a nice run from there. As far as a swing trade, up wheat up about 26% in just a few weeks, and then you can see here. Although I like to trade the futures, remember wheat and certain ag commodities, wheat, for example, and I think corn, they don't trade the usual hours. They shut down during the day, and they have kind of quirky trading hours. You can look it up. And so you're sometimes going to see things in the charts of the futures you won't see on the ETNs here that track the future, but the ETN only trades market hours, 9:30 a.m. Until 4 p.m. It's horrible. It's hard to draw out numbers here, but so that's what you're looking at here. Either way, look at that nice gap. See that big old gap and two candles right there, and there's your gap. That's a gap backfill. So from this chart, if you were only trading wheat and you weren't even looking at the futures, that would have been a logical pullback target and or place to step back in long. If you were out of wheat or wanted to get in. And then there's that uptrend line I gave you on the 60-minute chart. So if we get another leg down, sooner or later we'll come to revisit that. When you start to form a pretty clean uptrend line, quite often you come back to revisit it. And then once you break an uptrend line like that, that can be bearish. In this case, wheat's been in a bull market, so it really didn't correct much in price, more so in time for a while. Well, take that back. Then it finally set in, had another leg down. But bigger picture, again, turn off all the lines, and this is all the makings of an uptrend. An uptrend is simply a security making higher highs and higher lows and higher highs. That's it. And if you're wondering how much more upsides in wheat, well, remember wheat and most of these ag commodities have just exited, at least I believe, a bear market that's been going on for many years now. And so if wheat were to just get back to at least this ETN, I'd look at the futures, give a more accurate number, but just to get back to where this ETN was in 2012 from where we're at now, and you can see on the weekly chart, we're at resistance right around $7, by the way. That's worth noting. So, we could get a pullback here, but if we can pop above it, next target's 844 on this weekly chart. But to go up to those highs back in 2012, you're talking another 252% from where we're at right now. So, for anyone to think, well, God, I missed a boat on wheat, it's overbought. And look, hey, maybe my analysis will prove to be wrong, but I think that this is early stage bull market action. Whether we pull back here or not, whether we punch on through there, that is my next target. And then once we get there close to that, I'll give you some additional longer term targets. And let's not forget about the short setups. Just because we don't have any sell signals on the broad market yet doesn't mean we're not going to get them soon. They could come soon, maybe later. But the thing is, in trading and investing, I believe it's very important to have all your ducks in a row. Have your watch list, just whether it's a scratch pad on your desk, whether you have price alerts set on your quote monitor. Have your setups ready to go. This is one of them. This is SOXX, semiconductor ETF I highlighted recently, and the semis already broke down. That was my primary uptrend line. Broke down, back test number one, back test number two, to extend the divergent high right there, and have been rolling over. However, I have this BOD trend line I gave you the other day, benefit of the doubt. I added that because we have a few more reactions. Both trend lines come off those lows way back there, but I think this one is what should do the trick if we take it out and open the door for another leg down the semis. And the reason I'm not looking to buy a pullback to the trend line for the next leg up, it could happen, but right now we have negative divergence in place. And not to say this divergence cannot extend, or not to say that the divergence can't be burned out, because that's all possible. Again, I look at this chart, I look at the weekly chart, and I see a sector that's very stretched and with increasingly bearish technicals, divergences, and things like that. Bullish price action. Please don't mistake the difference of a bullish trend and bullish technicals. This is again a setup, just needing that proper catalyst, such as a breakdown, to then become an active, short trade. First target's all the way back down to 366. That'd be about a 15% drop in the semis. Remember, they've reported recently. I'm sorry, meaning a lot of them have, some haven't. I'm just going to rifle through the charts of some of the holdings here. You can see Intel. Remember, this used to be the 800-pound gorilla in the room, the big top dog, but now Intel has reduced itself. It's been overtaken by NVIDIA and ASML as far as market cap goes. Intel was for many years the biggest semi out there, and now it is a about almost $239 billion company. ASML is $279 billion, and NVIDIA is $383 billion. Intel, so lost its at least leader status there. Breakdown right there. And all the way back to that. That was a big level I had back then, though. It was colored up yellow. We hit it. That's support, and the 200-day moving average there. So Intel's at support. If you were going to short any semis, I wouldn't short this one right now at this point in time. Probably get a bounce there. Again, wait for the sector to break down if that's your thing. Let me see if any others stand out. Micron's down 4% today. You got to check earnings too on anything you're trading right now. I haven't scrubbed earnings on a lot of these. Check for that, especially with volatile stocks like semiconductors, because whether you're long or short, if you get caught on the wrong side of a big earnings gap, you're going to feel some pain. And remember, stop loss orders are great. I highly recommend using them, but they are useless against a gap. A gap cannot prevent anything. If you gap down on a stock, let's say you're long. Okay, all right, I missed the pause button there. I was trying to talk about this particular stock, Micron, and stop loss orders. Micron is, divergences have been building. It's caused little corrections each time we put in a marginal new high. Each one was a marginal new and divergent high with a little correct. When I say little, by the way, know your stock. Little in this one is 12% there. That second divergent high was a drop of about 13% as well. This most recent divergent high was a drop of about 13%. So we're here. 13, or yeah, right to there, and again 13. So again, it's not as if these divergences don't work, but based on the fact these are consecutive divergences, this is one bigger divergence with a series of smaller divergences within. Therefore, this would indicate the stock's going to have a much larger drop once the trend finally changes, the primary trend, like this. There was a trend line break. And from the trend line break, the stock fell about 44%. And I was talking, and I think the video was paused, I was talking about stop loss orders. First of all, remember, we're in earnings season. I have a link to earnings calendar on the site. Go to resources. on the top menu, and then tools of the trade, and you'll have an earnings counter. You can type in the symbol. For example, if you're trading MU, for all I know, they may have reported last night they're down 4%, but I'm not sure. I haven't checked. But know when your stock reports, especially in volatile industries or sectors like the semiconductors, because these companies, a lot of these, can go up or down on a gap based on earnings miss or beat. They can go up or down 10% or more, many of these semis. And so what happens there, if you're trading that, you need to know, be aware of when your company is going to report, because a lot of traders, especially active traders, swing traders, they will often close a position in front of earnings, not to be caught on the wrong side of a gap. And so while I'm a big proponent of stop loss orders, you need to know the limitation in the two different types. There's stop loss order, SL, and then there's stop limit orders. Well, the stop limit is SL2. Okay, let's forget about the drawings there. Stop loss order says, let's say you were in Micron and they were going to report, it's at $85 or so right now, and you wanted a stop loss at 82, right? You're going to limit your losses there if it hits 82. The problem with the stop loss order, they are great in most points in time. However, they're useless if and when a stock gaps down. My next target, my pullback target, minimum target, is about 74.10 on Micron. I think it'll get there sooner than later with these divergences and everything else, whether we make a marginal new high first again or not. You know, every time we've had these corrections, all these divergences, again, I think the video was paused when I was covering this, so if I'm repeating myself, please forgive me, but that was divergent high, not low. Divergent high, divergent high, divergent high, and divergent high. 1, 2, 3, 4. They were all about 13% drops, including this most recent one. However, that's just a series of consecutive divergent highs that make for an even larger divergent high. So, with all that being said, you know, you might say, well, yeah, you talk about these divergences, but it keeps going up, Randy. Absolutely. Sometimes the divergences ultimately get burned through or don't play out, but much more often than not they do. So there's, you know, you want to ride a trend. There's nothing wrong with it. If you're swing or trend trading this one, know that the pullbacks, as I just showed you, are about 13%, and that's just par for the course on this one. Now, going back to the whole stop loss thing, if you had a stop loss at 82 and the stock reports, there's just something happens. Bad news comes out overnight, and the stock opens down, let's say around that first support level around 74, guess what happens? Your stop loss order is untriggered. Take that back. A stop loss order will be triggered and filled when the stock hits or crosses below 82. And so if it opens at 74, once triggered, a stop loss order then turns into a market order, effectively. And you're filled at 74. So you're going to book that loss. You're going to have you're not protected at 82. You're sold down here, and heck, the stock may hit support, and the buyers may step in from there, and then you're going to really curse, you know, that whole process. And the other one is a stop limit. And so if you put a stop limit at 82, that says if the stock hits 82, sell me at 82 or better. That's the limit part of it. 82 or better if you're long. And what happens is, if the stock gaps down to 74, that stop limit order is triggered but will not execute, because it can only fill you at a price of 82 or better. And if it's not trading around there, you're not going to get filled. You're going to have an open and triggered, you know, the order part of it will be triggered for a limit order to sell at 82, but you're not going to get filled. So basically, this stock can continue to go down from there while your losses build on both on the stop limit. And so with a stop limit, you have unlimited risk if your stop limit order is bypassed. Keep that in mind. Your stock will keep falling. You have an order here, and the only way it's going to get you out of the stock is if it bounces back to 82. Even if it kept going up, it's going to fill you at 82 unless you cancel that order. And again, so the stop loss order won't you won't keep bleeding, but you will be filled on a gap down. And with gaps, you know, the reason stocks gap is its order imbalances at the open, and that's when everybody's orders get filled, and you typically really don't want to get filled on a gap. Quite often it's an overreaction, and then the stock's going to reverse, but not always. Anywho, that's Micron, and I'm not going to go through each and every one. In fact, we'll wrap the video. Let me see if there's anything else I want to cover. I covered the energy stocks, gold, The grains, which I said got a little frothy ahead of themselves and had a little decent correction yesterday, and that's about it. Oh, before I wrap the video up, I'll just hit on some of those short setups I gave you. Tupperware still in that trading range. It was mentioned as a short up here at the top of the range at 29.16 or so, or close to that level. And the next sell signal or objective short entry will come on a break below 23. I already gave you targets. That one was covered in one of the recent videos, or a couple of the recent videos. Winnebago needs to take out this trend line and the 73.60 level right there. Target range is down here about 61 down to about 59 or so. And again, these are just some of the trade setups. Tesla, still a potential short setup. I mentioned it right here last week or a couple weeks ago on a pushback to this 771 resistance. It's still below there, so it's profitable. Not by a huge amount relative to what Tesla does, but here's that primary uptrend line, and that's pretty big stuff, I think, if and when Tesla breaks that. And it's going to greatly help or increase the odds that we're going to go down all the way down here to that target at 464-ish, 465, if the market breaks down. Because again, this is a top component of the S&P 500 and the NASDAQ 100. So to see Tesla drop 32% down to that target while the market continues to new highs, very unlikely, just due to the simple mathematics of it. Is it possible? Yes. Is it likely? No. All right, let's wrap it up here and get the video out to you guys. If I see anything else, I'll post another update later today. This has been Randy Finney with Right Side of the Chart. Have a great day.